Hey everybody, Smart Silver Stacker here. It's 11 p.m. on Thursday, August 6th, 2020, and what a crazy couple of days it has been for the precious metals, especially silver, but gold and silver both moving up with big moves this past couple of weeks. Silver today hitting almost 30 bucks. Today at, let's see, 7:56 p.m. on the COMEX, silver traded for 29.89, so 11 cents short of hitting $30. And this is a metal that just back in March, 5 short months ago, was trading for about 12 bucks. So huge moves up. Um, Silver's up, I think, 60% for the year for 2020 year to date. It's moving up a lot. It's moving up fast. It's making big gains, and so is gold. Gold today over $2,000, comfortably over $2,000, $2,077 at the moment. Um, and we've had a little bit of a pullback here in the past couple hours. Silver's at 29. Gold, I think, is off its highs as well. But what a big move up. And it seems like, everybody keeps saying there's going to be a pullback and waiting for a significant contraction or a pullback in the price of the metals, but it hasn't come yet. And while, I mean, it certainly seems like silver's probably getting to be a little bit overbought in the short term, I think in the long term, we've still got plenty of room to move up. And I don't really see there being any necessity for a correction until we take out maybe the 30 level. If we move over 30, I would expect that to be an area of resistance where we could at least expect some consolidation, a little bit of a pause in this run up. But only time will tell. In the short term, a lot of stuff can happen. Any kind of news can cause the price in a volatile market like silver to drop. But if it does, I personally will only be viewing that as a buying opportunity rather than as anything to be worried about in the long term. And that's actually one of the things I wanted to talk about was how silver, what a small market the silver market is. And, that's part of why it is a relatively volatile market, significantly more so than gold. In a bull market, silver tends to move more than gold to the upside, and in a bear market, it tends to drop more as well. And the reason for that, or at least one of the reasons, is because of just how tiny the silver market is. So we can look over here at the Silver Institute's website, and they've got a list here of the top 20 producing countries. So for all intents and purposes, this is basically all the mines in the world. And we can see that in 2019, all of the silver mines in the world produced 836.5 million ounces. So we can be generous and we can round up, and we'll say that 837 million ounces were produced in 2019. So that's a whole worldwide production of silver for 1 year. And it's really a ridiculously small amount of money that it takes to purchase this. You can just do the math. Let's see, 837 million, and that's ounces. And even at today's elevated price, we'll say $29 an ounce. So what's the total cost of the annual worldwide production of silver? Just shy of $25 billion. $24.273 billion will buy you an entire global production of silver for 1 year. I mean, that's insane. That's such, 24 billion sounds like a lot. It's not chump change, that's for sure. I mean, $24 billion will get you a lot of things, including the entire world production of silver. But when you look at the scale of something like government spending, this is a drop in the bucket. Or when you consider the total amount of money that's out there, this is a tiny drop in the bucket. We can even look at this nice deficit tracker here on bipartisanpolicy.org. So they have a nice little chart here that will track the deficit. And of course, since March, you can see the deficit for the U.S. government has skyrocketed. And so far this year, we're in August, and it's at $2.744 trillion. But let's say for a normal month, one that's not affected by any kind of emergency spending, we can go back to February. So February of 2020, let's see, how many billions of dollars? $389 billion deficit. So that's money that the government spent beyond what it could raise from taxation. So money it didn't have. In the month of February, it spent $389 billion. So let's see, 389 billion, and that's what, February, so let's divide by 28. I think this might have been a leap year, but let's just use 28. $13 billion a day. So in 2 days, you could have purchased the entire world's production of silver with 2 days of government deficit spending. Kind of puts things in perspective. The gold market is a little bit different. There's a lot of above ground gold that exists, and we save gold. Central banks sit on it. People save gold. It tends not to be consumed much by industry because of its high cost. Not that it's not useful, but it's just very expensive, so it doesn't get consumed as much as silver does. So there's a lot of gold above ground, and when you use its higher price, you realize the market cap of all the gold in the world is in the trillions of dollars. It's very high. It's a very big liquid market. It can absorb a lot of money. Even if big investors start coming in and buying gold, it will drive the price up, but it's not like silver, where if somebody, a billionaire, one individual with a couple $1 billion decided to buy some silver, if institutional investors began purchasing silver, which, I mean, there are institutional investors that hold gold, but I'm not aware of any hedge funds or big institutions who have cash sitting around that are buying physical silver. I mean, if you can correct me on that and tell me any kind of large institution that holds silver as part of its portfolio, I'd love to hear that and love to have that information, but I cannot think of any, although plenty of institutions hold gold, central banks among them. So there's lots of investable gold above ground. There's not that much silver. It gets consumed every year, and what we produce in an entire year can be purchased for a small fraction of what the government spends in a week, beyond what it has. Not just what it spends, but the deficit spending. So when you think about the silver market that way, you can see that there's still quite a bit of room to move up. Also, silver hasn't even crossed its 2011 high. Gold is well above that at this point. I think the gold high from 2011 was $1,935, something like that. Now it's at 2,077, so it's surpassed that and continued moving up. Whereas silver was almost at $50 in 2011, and it has not even approached that level yet. So, I mean, I think it's kind of ridiculous that we're not there yet. We will get there soon, I believe. And I'm going to continue stacking even at these prices if I have some spare cash. Now, I'm not going to go all in on silver because there could be a pullback. I could be wrong about all of this. Maybe silver will go down. Who knows? You don't know what you don't know. But based on what I do know, I think it's a safe bet that silver is going to continue moving up fast, and it's going to go much higher. So this is really just the beginning of the bull market. I think there's probably a lot of people sitting on the sidelines thinking that they missed their chance and they missed their opportunity. I don't think that's the case. I think that silver at $29 is still cheap. Of course, none of this is investment advice. I'm just telling you what I'm doing, but I'm going to continue stacking here, and I think there's probably still opportunities to be had in silver. And speaking of which, I talk about physical silver a lot, but some of these mining shares are still pretty cheap too. If you look at the GDXJ, that's an index of the junior gold miners, and a lot of these companies produce gold and silver. If we go back to 2011, when gold was at a lower level than this, these gold miners peaked out at 166 here in the GDXJ, and today it's still down around $63. So again, this is a ETF. It's an index of all the gold miners. So it kind of tells you that gold miners are still really cheap and probably undervalued at these prices. So I'm an advocate definitely of having a core position in metals and, something tangible, something physical you can hold on to. But if you're looking for something speculative on the price of metals, not necessarily saying the GDXJ is a good buy, but it just shows you that mining shares are still kind of cheap. So I might pick some of those up as well. I think they're probably a good value, even though they've gone up a bit here since March. They've more than doubled since March, but the March lows were kind of crazy low anyway, and that was just a panic. So I think even gold mining shares and silver mining shares represent probably a good value at these prices. So it's another thing I'll be taking a look at. And if you have any thoughts on that, either paper assets like equities involved in mining as compared to physical metal, or if there's any miners that you think warrant a look, let me know in the comments below. I'd love to know what you think, and I appreciate you watching. Uh, Congratulations to anybody who's been stacking silver. If you watch this channel and you stack silver, you've done well in the past couple weeks. So here's to a continued run up in the price of metals so that they can get closer to a fair value. Anyway, thanks for watching, anybody. Please comment below, like the video, subscribe to the channel. I'll be putting out more content in the future, and I'll catch you next time.